Good morning. What's up, guys? How we doing? Hope you're all having a good Friday morning here so far. So let's get down to business first, as is typical around here. So to start, we have the University of Michigan Sentiment Preliminary Read. Okay, this is the prelim number. This is the more important number that hits at 9 o'clock Central. All right, that's 30 minutes from now. Adjust for your time zone, of course. That will move the market, and I will not. I'll just say I will not be. I'm not going to try not to be. I won't be in a trade at 9 o'clock. So I'm cool with taking a trade. With my average trade duration this time of day, like the first half hour, if I'm able to squeeze one in, I'm open to taking one between 8:40, the close of the 8:46 2-minute bar, and I would say the close of like the 8:54 2-minute bar. That's my thought process right now. If we can squeeze one in like that 8 minutes, cool. Otherwise, we'll have to hold off until after that read hits, but I would happily squeeze one in if we get a nice setup between those candles. All right, then 9:50, Trump is going to be at a round table. And then we have some Fed speakers later tonight, but that's after the market closes anyway, so we're not too concerned with that. So as far as news, we have one read to be concerned about. And then, as always, any potential random tariff news is on the table. What's up, guys? How we doing? Good morning. Hope you guys are having a good Friday. Chris, Trick Biscuit Exposed. What's up, guys? Pat. Ricardo, Scrumptious Peter. Lars, welcome back, guys. How you doing? Ken, Tony, and Rick, what's up? There's a big old dump off the open. Look at that. We got a big candle on the opening bar and then a push. Interesting. Okay, so we'll let these institutional orders clear out. Again, I usually give it 10-15 minutes, usually about 14 minutes, and then that 8:44 rollover is when I really start looking for my first setup on the close of the 8:44 to 8:46 2-minute. You know, I wouldn't be against, by the way, taking a 3-bar sequence on the 5-minute chart for the bar that closes at 8:45, but it's not all that likely. It doesn't happen that often, so we'll see if we get it. Jack, good morning. Zach, how we doing? Lee, welcome back, brother. How you doing? Scooby. Christian, good morning. DK, what's up? Gaines, welcome back, brother. Happy Friday. What's up, Chris? Welcome back. Where were you yesterday? I missed some of you guys. Day Trade Tom, what's up? Chris Castle, Nia, Cossie, how we doing? Scrumptious, good morning. Superfly's back. Mario and Clinton. What's up, guys? All right. So, we should talk market inertia, right? Kind of get the feel for the day. You guys see, we're always looking at that bottom chart when we talk market inertia to kick off the morning. That's the daily, and again, it's just showing the New York session. I do not include Globex because I just want to know the context of, hey, what has the New York session's been doing? And we've been seeing a lot of ranges, right? Now, back on, I believe it was Tuesday's bar. That was the one bar where we were like, okay, is it possible that we start entering kind of a trend market? Maybe we see an upside trend market. Let's still continue to think range, but with potential for breakouts. And we did not end up getting that at all. Wednesday, Thursday, both kind of hung out here. Now today we're opening in a similar story, or with a similar story, I should say, and we're kind of flat. Personally, as far as looking ahead, I'm inclined to believe that we're probably just going to see a range out of the market, at least for the foreseeable future. And that's fine, as long as we can see volatile intraday activity. I don't really care, personally, for me. Now, a lot of you guys probably care, but for me, I don't care where the market goes in the next month as long as we're moving and as long as it's controlled. Again, you look way back here, this was tariff talk. That was out of control. All right, but this region here, that was half decent, right? We saw some controlled movement. It was volatile. We were seeing bigger ranges during the sessions. This, overall, I've been able to perform okay. You know, we've pretty much been treading water the last week. But before that, like coming into this, I was hitting really, really good base hits for maybe 6 weeks. And then this last week has kind of been, I hesitate to say the toughest because it's been such a small sample size of trades. But that's okay. That's okay. We're going to see what the market gives us here today, and we'll just continue to take good setups and accept the result, right? How you guys been trading lately in this market? Again, these last 2 weeks, I understand. I know it's been tough. It's been tough. A lot of traders have been in drawdown, which is fine. There's nothing wrong with drawdown. Thankfully, I haven't had much drawdown. I've just been kind of treading water, which is always kind of a relief when you're, well, I don't want to say struggling because that means something different to a lot of people. But when you're, you know, when your win rate starts to kind of take a hit, to be able to tread water is a good feeling. It's a little frustrating at most. But there's nothing, listen guys, in a period like this, if you're in a little bit of drawdown right now, or even a decent amount of drawdown, it's all right. These you run the stats like we talked about yesterday, these periods are gonna come for everybody. The difference in result midterm, not even necessarily long term, but just midterm, is going to come from, okay, when you're in that period, how do you react? If you spiral and you start putting on C quality trades all the time, it's going to get worse and you're probably going to hit yourself out of this career. Because at the end of the day, as long as you can stay in the game, you have more opportunity to learn and get better, and you usually end up, if you can stay in the game for, 15 years, you usually end up finding some kind of success, right? You're just forced to at that point because you're forced to make the changes if you want to stay in the game that long. Don't hit yourself out. And the easiest way to do that is when you get in a little bit of drawdown. It's easy to win, but when you get in a little bit of drawdown, you start taking C setups. Now you can't afford to keep funding your trading, or you keep blowing accounts. You can't afford to keep investing in the funded accounts. That's a brick wall. You don't want to be at that point. So there's nothing wrong with trading small, collecting your data, and keep a level head, because once you have that data, the drawdown is probably 5 to 10 times easier psychologically, because at least you have something to look at. And I've been there. When you have drawdown and you have no proof that what you're doing is working, that sucks. Which is why I stopped doing that and started tracking all my data years ago. And that's why I preach that so heavily now, because that's what fixed it all for me. The psychological problems, at least, to a degree. You can't completely solve them, but it makes it a hell of a lot easier. Vinny, good morning. Rich, I've been using parts of your system on my own trading, and it's been good. I've been calling it the Pharaoh's Gambit. Cool, brother. Scott says, tough week. A lot of setups have failed with fickle direction from the market. Josh, got reversed on twice over the last 45 minutes. Yeah, listen, these range markets, they can open a lot of opportunity for channel scalping, but they can be brutal. First trade we took yesterday, I liked the setup a lot. Still thinking about it even this morning, which I'm just thinking about it now for the first time. I like that setup. I'd take that setup again right now if it presented itself, but it reversed. I mean, we're in a range market, and while it still makes sense for me when I look through my data and I sort it all by, inertia that the market was seeing at the time, it still makes sense for me to take those trades in a range market, but sometimes you get reversed on, and it looks brutal. It feels kind of brutal, but it's not. Again, the more data you have, the less you even care to care. It just doesn't matter. But there's a fine line there. If you're taking breakout bets 15 times a day in a range market, that's probably not the best idea, right? The same way that if you're trying to scalp any little channel that maybe presents itself in a heavy trend market, you're probably going to get burned. Context is the name of the game, really. All right, so we are into almost 841 territory. So again, you guys remember at the beginning I said at the close of the 846 bar, well, the 844 bar, the close at 846, I'd be interested in taking a setup between then and 854, because at 9 o'clock we get the University of Michigan sentiment preliminary read, which is the important one. There's two Michigan numbers. I believe they're 2 weeks apart. The prelim is more important because they're usually pretty accurate, and that's the first look at the new data. The final read is just the same look, but revised a little bit, but they're usually pretty good the first time around, so the prelim usually moves the market more than the final. Again, that hits at 9 o'clock Central. Adam says, morning, first time here. Would you mind repeating what you just said about what helped you to solve all your psychological issues? Much appreciation. Love the channel. I appreciate you being here. I hope to see you in the chat daily. Adam, the way that you solve that, there's no like secret. There's no like, hey, when you wake up, you know, say your name in the mirror 18 times and tell yourself you're worth 54 million and all this stuff. All that stuff's great. But the reality about fixing psychological problems with trading is to have something that you can look at. Because what does it all stem from? It all stems from an insecurity of not being able to make it work, right? I'm not saying that you're an insecure person, but if you have no proof that it's going to work, or that you're even good at this, or even that you have any business looking at a chart, it's really hard to sit here and be like, I should keep going even though I lost the last 6 trades in a row. The only way to solve it is to have undeniable proof that what you're doing, there's something to it. And the only way to have that is to have data. So trade small to start, 1 micro, I'm talking. Track your trades, find whatever edge you possibly can. Doesn't even matter. I don't care how simple or complicated it is. Ideally, it'd be a little bit more simple based on price action. Find any edge at all, and then take that edge and start to scale it. And in doing so, the setups that you find do not work, don't have edge for you. It was cheap to learn that because you weren't trading huge out of some weird ego. That's how you do it. And then when you're scaled and you're trading bigger and you come into drawdown, rather than sitting here like, I don't know what this is all about, maybe I should just go back to work, blah, blah, blah. You can look at your data and say, it's been 3 days. It's been 6 days. I have weeks, months, years, decades of profitability. And I'm not just telling myself that. Here are the numbers. That's how you fix it. That's the reality. Joseph, good morning. Aaron, how we doing? All right, we're seeing some, the range on these bars is actually not bad. If we look up top, the ATR is already above 25. We're seeing good range. That last bar had a 46-point range. This is a little bit higher than yesterday, which is good to see. Yesterday was tight. James says, your advice to size down and scale horizontally made me realize that beating trailing drawdown on trading the minis is nearly impossible with variance, even with an edge. Yes, James, you can have a large edge, but if you're trading a 50K account with minis, it doesn't matter because no edge in the futures market is going to be good enough to avoid the variance of having a $2,500 drawdown, which is nothing. Trading the minis, it's just not. Now, like, you don't need a lot of edge. Vegas was built on a 1 to maybe 3, more like a 1 to 2% statistical edge. The entire strip, everything you see, was built on 1 to 2% of edge. You do not need a lot. But variance is a thing. It exists. So you have to trade small per account. Well, then it's like, well, how do you make any money? You scale horizontally. It's the only way that makes sense in my brain. Oh, but I have to spend another $30 on evals. I get it. The expenses go up. But do you want to do this or do you want to keep blowing accounts? That's the reality. All right, so here we are. We're 20 seconds out here from the close of this 2-minute bar. We're developing a little bit of a channel. The top end of that channel is kind of aggressive downside. It really only has one touch point. So I still gotta wait to watch this thing develop. Even with continuation, I would need a third bar here. So the close here is not gonna be a trade that I could take. Continue to watch this develop. Remember, if you're just joining us here, the University of Michigan sentiment preliminary read hits in 14 minutes. Alright, I'm watching to see if this becomes a thing. Again, I only really like to consider levels off the open. After the bell, I mean. You could draw it more aggressive, like start it more up here and draw it like this, but I would probably draw it like that. That's not set in stone, by the way. I'm just drawing that because I know that some bears are going to be watching. You can see they're already stepping ahead. Like, yeah, let's fade this back. See if that becomes a set in stone level. Lee says, I feel like a lot of prop traders don't understand how Lee, my man, how valuable your code is on Take Profit Trader to get no activation fee. Yeah, it's a big deal. It's a big deal on Take Profit because you get 30% off the test fee, which is cool. That's great. But it's like 30%. It's not 90, you know. But it kind of is because the activation fee is well over $100. But when you use the code, you get 30% off, and then you have to pay nothing when you pass. There's no fee. So, everyone thinks that Apex is cheaper in every case. It's cheaper in the more, the bigger accounts, like the 150s, the 250s, the 300s, obviously, at Apex. It is cheaper to go Apex if you're doing those accounts, but for the smaller accounts, assuming you use the code and get no activation fee, Take Profit's actually cheaper. It's just more up front, right? So I guess it depends on your confidence in your ability to pass and whether or not you're trying to scale horizontally like with 20 Apex accounts, or if you just want a few Take Profits to start with daily payouts. I think both of these firms have been great to me so far. Yeah, crypto, I think that's a good way to look at it. If you have very low confidence that you can pass the evals, or if you're just buying an eval to gather data, you should probably go with Apex because the upfront eval cost is way less. But if you're like, I'm pretty damn sure I'm going to pass because I've been doing this a while, I'm pretty good, then Take Profit Trader is probably your better bet because, I mean, if we're being honest, one Take Profit Pro account is the better asset than one Apex funded. But Apex, you can get 4 times the amount of accounts. You can get 20 instead of 5. And with Take Profit, you get daily payouts. Apex, you don't. It's not which one is better. It's just, I think, mixing the two creates like a synergistic effect that helps you scale and generate consistent revenue at the same time, which is why I use both. All right, still watching to see here if this turns into a nice little descending channel. It looks to me like you can see these shrinking bull bodies. The bears are trying to reverse it right ahead of that level. It's not incredibly clean yet, though. I would need to see this pull back hard and then see a retest. But I'm still hoping to find a setup here before about 8:54, because again, we have the Michigan number hitting at 9. There we are, getting a push, but hold on now. See the 5-minute? That 20 EMA is kind of right ahead. So I would need to see a nice close above that, which would put us very close to... Yeah, that put us very close to the high of the day so far. I know a lot of you guys like that 15-minute opening range, so that is now set. Has been for a few minutes, obviously. Bill Gunn says, is it a number that moves the market? Yes. Yes, yes. It's always kind of a toss-up. How much is it going to move the market? But if there's a single University of Michigan number that's going to move the market, it's going to be the prelim sentiment read from the University of Michigan. Now let me check. Did I get an email? I don't think I did. Yeah, I did not get an email from Take Profit Trader about this read. That's surprising. I feel like they should look at this as a news event that they probably shouldn't allow trading on just because their business model. You know, a lot of people don't like that Take Profit doesn't let you trade news. I don't think anybody should be trading news. It's been studied relentlessly, and news is essentially 50-50, unless you're Nancy Pelosi. But a lot of people don't like that they don't let you trade news, and that's fine, but like they don't really write off too many news events. They write off like CPI, which is obvious, FOMC. It's not like every data release they're not letting you trade. They're really not that strict about it, so it's kind of a whatever rule. All right, we have, well, this kind of would have been the bar that I would have needed to see a setup on as far as the close is concerned. There's really nothing there. So we're probably gonna have to hold off here until after the Michigan number. The Michigan volatility, by the way, if it's anything other than what the market kind of expects, it'll push the market around, but usually only for a couple minutes tops, and then that volatility kind of dies. And again, we do have Trump at a round table. I think he's still in the Middle East at 9:50 Central, and that's it as far as news. That's really all. So we're looking at the Michigan number here in 6 minutes from now, and then any random tariff news coming from that round table, if we get any, which we'll see. We haven't seen a lot of headlines from Trump while he's over there, but it's always on the table. So, but as far as news, once we get through that Michigan, we're really pretty free and clear. At least as free as clear as we're ever going to be in tariff talk time. All right, so we should really clean up this chart because this trend line, it tested, it didn't really become a thing. So we'll just get rid of that. And we will watch how things develop as we come into this data release. Well, that's a little bit of a flat top. You could argue a little ascending resistance. I'd call it more of a flat top. Up there around kind of 445 region. Maybe the low 40s. Yeah, that attempt at that descending channel that the bears were trying to put in, that failed. So now it's a question of, do we end up entering a wedge with a flat top or an ascending channel? But either way, I'm wondering if this Michigan number is going to push us out of this regardless, so we kind of have to wait. Okay, now worth mentioning here, yesterday's New York close was at 21,412. Okay, which is, I mean, here, right? So we're not far from that. Yesterday's New York session high was up at 21,529. So we have a little bit more room as far as that's concerned. But the way that the market's been ranging, those previous days, you know, opens, closes, highs, lows, they've been areas of interest. Really the break-even point on the day for the Nasdaq, which currently, I mean, we're only 0.2% green. So we could very well see a test if this Michigan number is anything that the market's not expecting. Taz says, morning buddy, quick question for you. Quick question, how do you add your accounts to see them like you see them when you copy trade? Sorry, not sure how to ask it on Tradeovate. So when you guys see like this, I assume that's what you're talking about. This is a copy trader that I have no affiliation with, but I like it. It's the copy trader by a site called Affordable Indicators. It's been pretty damn good. It doesn't fix the problems that present from NinjaTrader, because that's out of their control, like the ghost positions and stuff, which is why you always hear me say I have to flatten, which is kind of a pain, but it's fine. As far as everything else is concerned, though, there's a big problem with a lot of copy traders where it's really confusing, and I cannot stand that feeling. Like, I feel like I can't check it enough times to make sure that I didn't mess something up, or like there's a setting where I'm gonna enter and I mean to buy 1 micro and it buys 10 minis, and like, it's just a nightmare. Prop trading is already complex enough. We don't need copy traders blowing accounts kind of like behind our back. So this one is very simple to understand. You can check, is it micros or minis? If you set, what I like to do is I actually kind of sacrifice 1 funded account to act as the leader, and I only trade 1 micro in it, which is why I kind of call it a sacrifice. And then so that I can have my baseline really easy to remember, that it's always 1 micro. And then when you look at this, the size is like how many based on that 1 liter is that account trading. That's how I set it up. That works for my brain. This might be super confusing to you. Do something else. For me, it works well. Yeah, that's how I set it up. All right, 30 seconds out here from the Michigan number. I am no one. Well, you're someone around here, brother. Stupid question. What is a ghost position? No stupid questions. A ghost position is, in NinjaTrader, when you close a position, it says you still have a position even though you don't. And then there's really no way to know. So when you press flatten in the copy trader, it's trying to flatten a position that doesn't exist. So what it does is it opens a position in the opposite direction, and then you just have to reclose that quick. So when I'm flattening, I am pressing the button twice. 1 to try to flatten, and then it flips me the other way, and then I just flatten that one really quick. So I pay a little extra in commission when I have to do that. It's really no big deal. There's not a good fix to it. NinjaTrader, being what it is, should have had this fixed a long time ago. But they haven't, so we got to deal with it. But just be aware that that's what's going on. All right, Michigan number came in at 50.8. Forecast was 53.4. Again, that's 50.8 compared to a forecast of 53.4. So there you go. You get about a 40, 50 point move, 45 point move or so. So that moves the market. Wouldn't want to be in a trade while that hits. So we'll wait another maybe 60 seconds. Then this volatility should be pretty much clear. And then we can start putting some trades on here. Good, let's look at the 5-minute chart. Look at that 5-minute chart. That is ugly. But we'll let this work itself out. And then we can start taking some trades. All right, so Michigan volatility by now should kind of be fading. Getting back to a little bit more normal. Now, again, left on the agenda really all today is any risk of random tariff headlines, which is always a risk right now. And Trump is at a round table in 47.5 minutes. So 9:50. Pumple says, NinjaTrader is superior in so many ways. I agree, but there are some things that just suck about it. It's such a great platform. In so many ways, like you say, I love how it looks. I mean, it works very well for on screen. It shows the lines and everything. It's very nice. The way that you can connect, you can have a bunch of different connections is very, very nice. But then they have the silly little issues like the ghost positions. Like that should not be a problem with how advanced the platform really is. And I know a ton of people have had that issue because I was doing some deep research trying to figure out what was going on. What was this when I first started using it, and a bunch of other people were having the same problem online. And no one can figure it out. Because I don't think it's fixable yet until they fix it. But that's okay, we just gotta deal with it. That's part of trade and prop. So you just have to be aware. Alright, let's see if we can get a nice little breakout here. I don't care if we break up, I don't care if we break down. Just looking to grab a little setup because this channel here is, it's fine, it's a little tight this early in the day. And these tightly, again, context is always the word of the day. When you get tight little channels this early in the day, they're usually, I think of them as a little more tightly wound, if that makes sense. Because like early in the day, volatility really should be a little bit higher. If this was happening at 1 p.m., it would make more sense, and I could make more sense of that. But when we're seeing this at 9, it's like, yeah, someone's gonna win here, and probably relatively soon, as far as breaking out. So let's let that happen. See if we can get a nice little continuation trade. Joseph says, your videos in this live stream really helped me, brother. Thank you. I'm glad to hear it. Good to see you each day. All right, Bears. Nice, nice, nice. We got a little flat bottom down at 21,390. Now, remember, that recent wick down there, that was on the news release. Okay, but we still held that flat bottom, so I'd be very interested. I mean, that is the low of day. I'd be very interested in seeing if we could hunt those stops, but it's kind of tight. I'm not sure there's enough room to really get a good set, unless it lined up very specifically. A good continuation setup for me to put on still ahead of those stops. It's just a little too close. I mean, we're talking 25 points. Lucas says, which market are you following? This is NQ. Nasdaq futures contract. Well, technically right now you're looking at MNQ, but it's essentially the same thing. It represents the same thing. All right, well, as far as ATR is concerned, you guys know we always need to talk about that. ATR is still sitting above 25. I mean, it's at maybe 26 currently. It's being propped up by these slightly outsized bars. If you take these two out, then ATR is really sitting still below 25. But once we break out of this little wiki channel here, I imagine that'll start to creep up a little bit. Aaron says, my gut finally screamed, go long. Been waiting ages for this setup, so here goes nothing. Interesting. Are you looking for a break to that flat top? A little bit of NVIDIA news coming out of CNBC. They say NVIDIA says, we are not sending GPU designs to China after reports of a new Shanghai operation. NVIDIA moving on that? Not too much. This is the kind of movement, man. We've been seeing a lot of this lately, the last like week or so, and I haven't seen too much. I just try to focus on my own trading mostly, but from what I have seen, it seems like a lot of people have kind of been getting sucked into trading this kind of thing and getting burned, obviously. This right here, unless you're going to trade the channel of this, which again, I wouldn't really do because this is essentially a flat top and a flat bottom, which is already 50-50. But especially when you're in a wicky range like this, and especially when it's sideways, it's even more so 50-50. Which I kind of think a lot of times is why we see volatility just die so hard when it's in a move like this, because a lot of traders and a lot of participants who are utilizing big size, who have gotten to that point and move these things, they're holding off because I think maybe they understand that this is 50-50. So it kind of turns into a self-fulfilling prophecy where everyone's kind of hands off, let this thing make a move. And I got to be in that boat also. All right, Bears, let's go. Let's see if we can get a nice little push toward that flat bottom. I'd hit that. I would hit that. Now, you might say, well, the first bear body in that sequence, if this gives us a sequence to begin with, that was a big wick back upside, right? Well, yeah, but that second bar closed right below that wick, which tells a story. That tells me a story. So if we see a nice low close out of this bear bar, and it closes very close to the low of the bar, if not at the low of the bar, in this region here, like right here, I'd slap the sell on the rollover and try to get a quick push into the money with some continuation through these stops. You know this is loaded with stops. But let's see if the bulls just step in and ruin that whole idea. Bulls wicking this baby back up. They're kind of shooting my setup in the foot here. And there's the rollover. Very typical of a range market to see kind of disappointment like that as far as continuation. Nice little stop hunting setups are concerned. You get a couple of bars in one direction, 2 or 3. Usually they're kind of wicky and usually they get reversed on in a range market, which I mean, look at the bottom of your screen. That's the daily chart showing just the New York sessions. It's a little ridiculous. Wrench, does the last sequence bar have to be larger than the second or first? Ideally, in a perfect world, if I were writing a book and I'm like, hey, here's a picture of what I would call an A+ continuation, it would be a clean first bar closing at its high, a clean second bar growing slightly compared to the first, closing at its high, and a clean third bar growing slightly yet over the second bar size, closing at its high, with very few wicks. That would be like the perfect, obviously you're not going to get a perfect setup most of the time, but ideally it's growing. But if it's smaller and it's considerably smaller, then I'm not putting the trade on, because that signals, especially in a range market, hey, the other side's trying to trigger some kind of reversal sequence, and they're in the very early stages, which lately has been happening quite a bit because of the context of being in a ranging market. You know, day to day, like everyone can see when they look at the daily chart, breakouts aren't happening. Any breakout gets wicked back. The bodies are staying small. Everybody knows that. Perfect score. Good morning. Savant says, morning guys, how you doing? Anything yet? Well, if there had been anything yet, then you better believe that I had broken a rule. So no, there's nothing yet. I mean, this price action is something. But this kind of thing in the morning, it can be deceiving. A lot of times what you get is you end up getting a break one way or the other, and then the volume returns and things start moving. Fred, how you doing? Hey, Steam. What's up, brother? Let's see if this can break through. When you get a flat top that's this aggressively holding, and it's kind of all over the place, I'm less interested until we see a push through, which we just got. Good. Okay, now let's see how this bar closes. Now also, you look at the 5-minute chart, right? This 2-minute bar here closed at 37. You see 37. There you go. You can actually see without squinting. There's the 520 EMA. Which is why, you know, some of you are like, well, hey, why didn't you put this on? That would be why. I'm waiting to see how this bar closes. We have 65 seconds until that happens. I would need to see this close obviously above that flat top, near the high of this 2-minute bar, which would obviously also put us above the 5-minute 20 EMA. Through that flat top as well, I already said, and that would be a great rollover buy for me. 45 seconds out, let's see if we can get that. And I don't want this bar to be too outsized. Okay, meaning compared to the previous bars. If this were to shoot up to 480, then it's like, okay, clearly we got some news or something that I need to hold off. But we should also consider, you know, you have the high of day here, right around 470. Okay, so I will get ready in case we can put this baby on. We got 13 seconds. We're gonna stop hunt that high of day if we can get a nice clean close. There's the rollover, and I will. I am sitting long. Make sure I got a good fill and everything. Okay, so we are filled in all the accounts. So I'm long, average price 21,454.50. Again, just looking to stop hunt that high of day. That's the idea here. And let's see if that trade works out. Stop down at 21,414.50. take profit up at 21,494.50, and ATR currently is sitting at about 24, maybe 25-ish. Okay, so if that continues to fall, then we'll have to see as far as management. Right now, I'm gonna leave it. I really would prefer to see us test the high of day, see if we can trigger some stops. Yes, it did happen. The high of day currently, well, the high of day and the high of the 15-minute opening range was the open, essentially. So let's see if we can make a nice little test of that. Here we are retesting that flat top. It's very normal to see that. So I'm comfortable with that trade. Currently sitting about 8 points in the red. Finished green yesterday. Actually a little more green than I did even at the end of the stream yesterday. But we're on a weird streak. I hate to put this out there again today, but I've been on a weird streak lately where like the first trade of each day for I think 4 days now has been a loser, which has just been like a little, I don't know, it's like whatever, but obviously, you know, we don't want that to be the case, but it is what it is. You get those little anomalies coming. The same way that, by the way, you're going to win 12 trades in a row. Don't get too high on that. All right, we are, by the way, at the same time that we're retesting that flat top, we're retesting the 5-minute 20 EMA. Okay, so let's see if the bulls can end up holding both of these, or if the bears end up fading us down through there. There's the test downside through the 20 EMA, currently sitting about 20 points in the red. Let's see if the bulls can hold this, or if we end up back in this range here, which would not be great for my trade, obviously. I really want to see a test of that high, because I know that there's stops up there off that opening high. Our bears trying to suck us back down into this channel. My stop's at 21,414.50. Okay, so we still have a little bit of room. Fear and Greed Index just hit, by the way. Not that we can do too much with that information, but it's currently sitting at 71 out of 100, indicating greed. Which, with the movement the last few days, I'm not sure I believe. Jacob says, have you ever tried trading London session or the Asia session? Yes, both. I would tier them like this. I think New York is obviously the best. London as number 2, and Asia as the default number 3. Asia is so tight, and it feels a little manipulated because the ranges will be very, very tight, and then all of a sudden you'll get a big push. It's just hard to trade. That is like true chop out. Now, if you make a bunch of money in Asia session, keep trading it. I don't historically, so I don't trade it. London is better. It's like a slow New York session. Yeah, and of course I'm talking about NQ. All right, Bulls, come on now. For once this week, let's show a little bit of backbone and hold a beauty of a setup. Waylon says, Nico, I was in a trade yesterday, and it got to literally within 1 tick of my stop loss, turned around and hit my full take profit. You were in my head saying it. Said it, accept the outcome. Thank you for all that you do. Well, I respect the discipline. Very good discipline to just let it sit and accept that outcome. It's going to happen. Listen, it's going to happen both ways. It's going to get within 1 tick of your stop, turn around, hit take profit. Obviously, it's nice when that happens. But it's also going to happen the other way. It doesn't mean you should have sold early, by the way. It's going to get within 1 tick of your take profit, turn around, and stop you out. That's just part of the game. It's going to happen. It is an unlikelihood, statistically, but it will come if you trade long enough. And it sucks when that happens, but it's great when it happens in your favor. We don't think about it that way, though, right? We only think about it when it happens against us. And then we go, man, this happens to me and only me all the time. No, it doesn't. It happens to everybody pretty much the same amount of times. All right, Bulls. See you do something with your life. Come on now. Testing a break backside through that flat top and the 20 EMA on the 5, which the Bulls kind of failed to hold previously. Let's see if we can get a nice little reset on that continuation that we were seeing before. Back to just a few points in the red here. Now that 21,450 level, that's a tier 4 level. I'm not thinking about it really at all in any meaningful way. Tier 4, not a big deal. All right, what's ATR doing? ATR is now creeping below 22. We're at about 20. Well, we're at about 22 on the average range of a 2-minute bar, which is tight. Okay, it's below my preferred minimum of 25, but that's okay. Ramisha, good morning. How you doing? Bear's trying to suck this baby back down. All right, again, now my stop is down at 21,414.50. Man, the Bulls lately, really either side, just not a lot of backbone here. Let's see if we can turn it around here. I have nothing to do except let this trade work, let it sit. Now, if we end up pushing back upside and the ATR collapses even more, then it's decision-making time. But right now, my decision has to be, let it do what it's going to do. All right, here we are. Bear is pulling in here, and that is going to continue our first trade of the day being a loser streak, I think, onto the 5th day, which is kind of crazy, but it's going to come. It's part of the game. Okay, so let's move on here and see what else we can grab. This is clearly just a little range. Now, this breakout, when I say 80% of breakouts fail, I'm talking about any breakout attempt. This breakout was so clean. The setup was so clean. It was such a good buy. And we top ticked it. We turned around and came back down into the range, which is fine. I had this up here, by the way, for stops. So I like the trade. I hate to say it. I'd take it again. I know some of you guys are like, why would you take a losing trade again? Well, because it has good data. But the market here is just range bound. We're coming back into, by the way, we're 16 points, 15 points away from the break-even point on the Nasdaq. We're currently 0.06% in the green. So that break-even point, that's been an issue. I just want to see us pick a direction and go. Even if we end up developing a little channel, this channel here, this is just kind of, this This is tough. Tough to justify taking a trade inside of this unless we can see another clean breakout attempt. But it would have to be clear of pretty much all those things that we discussed, including the 5-minute 20 EMA, break-even point on the Nasdaq, which we're currently at. We're literally 0% right now on the Nasdaq. Shane, if you know it's a range, why are you trying to trade breakouts? Well, I just explained the setup there and the stop hunting. The probability, Shane, the probabilities adjust based on the setup at hand, right? When I say 80% of breakouts in a range market are going to fail, I'm assuming you take every range breakout, regardless of quality, every range breakout attempt, regardless of quality, and you throw it in a pile. So I only take it when it's higher probability, right? Pat, what are your thoughts on starting to trade with 1 micro and adding a micro as the move goes in the direction of profit? Let me think about this. So, anytime, by the way, guys, anytime that you're trading prop and you're going to add to existing positions. By the way, I'm watching this. This is only 2 consecutive bars and we're still at that flat bottom. I would need to see a 3rd bar. And I might be saying, well, it looks like 3 consecutive bars, right? Well, it does on the 5-minute, which doesn't close for another 3 minutes here. But actually up here, if you look at the differing data between Thinkorswim and Ninja, well, really Rhythmic, we actually got a different close on the 1st bar. Big, like, doji bar at the beginning, right? So I want to see how this bar develops. Okay, but anytime you're trading prop, guys, and you start adding to existing positions, you have to be very careful that you're not breaking rules. It's a lot easier to understand for sure that you're not breaking rules if you're in once, out once with prop trading. If you start adding, that's fine. But what starts maybe causing some problems, I haven't had any problems with this, but it would probably start causing problems if you're not careful about it, is if you start like recycling contracts. And let's say it depends on how Apex would do the accounting. Well, let's say you buy one, buy one, buy one, sell one, buy one, sell 2. If any of those sales are for like a 1-tick profit, you might be breaking the reward to risk rule that Apex has in place. Now that's with Apex. With take profit, you'd have less issues. But Pat, I think what you're saying works best for static drawdown accounts, realistically. Yeah, you guys see here where I'm now looking for another bar. This is going to turn into a doji. Or a small red bar closing at the previous bar's wick. Kind of the same thing there. Okay, now this bar here, which closes in 1 minute and 50 seconds. If we get a nice push downside and we close outside of this range, and we close at the low of a growing bear bar, but not outsized, I'd have to put it on. And then any argument that the bears really have is very aggressive, right? As far as descending support, they could say, well, there's actually one over here. This is a pre-market level, so it's less meaningful, and you would meet that lower. A nice low close, by the way, out of this bear bar in 1 minute and 10 seconds would also make us free and clear. You can see at the top right here of the break-even point on the day for the Nasdaq. These are all things I got to think about. We just got the close on the 5-minute chart, by the way, and the rollover, but that was a big wick out of the 5-minute bar. All right, bears, calm down. Not too outsized here. All right, let's get ready. We might have something here that I got to put on. Ooh, big old wick. You see that? Can't take it. No trade. No trade. Bears lost their backbone. Bulls wicked it right back up. Covered more than half the size of the body with wick. Gotta hold off. I'm very picky about continuation setups, especially when we're in a range market. I'm picky in a trend market too, but a little bit less so. There are a few trades here and there that I would put on in a trend market that I wouldn't put on in a range market. This here is an example of a continuation bet that I like to take in a range market. This is not. Big wick. All right, same idea here applies on this 2-minute bar. We're clear of the break-even point on the day on the Nasdaq. We look at yesterday's open and low. I mean, we're clear of those. Now the only thing that could go wrong here as far as not getting the setup to set up is we see a big wick back up out of the bulls, or this bar becomes too outsized. But if we get a nice close near the low of this bar, which right now we're getting that wick, then I would have to sell that rollover. I'll get ready just in case. Nope, not there. Big ol' wick closing inside of the previous bar is wick low. Just not there. Very typical, by the way. This right here is the reason why I have to hold off when you see big wicks like that, because it's no longer a continuation trade. Now it becomes a reversal attempt. It doesn't mean it's a reversal. It means it's the early stages of a bull reversal attempt. They're trying. Doesn't mean they're going to succeed. But you get shrinking bear bodies. You know, you get increasing size of wicks. And then usually you end up getting something close to a doji, and then you get an attempt at a bull bar, and vice versa for a bear reversal attempt. But it doesn't mean they're going to succeed, and sometimes you end up getting continuation, and then we get a setup. But a lot of times this turns into kind of chop where we need to reset and then look for a new setup here. But you know, I got to be honest, I'm happy. I'm just happy that we got a breakout in one direction or the other. That channel was brutal, man. All right, we're a minute 30 out. I like when the market pushes lower. It's volatility going. There's nothing worse than a very, very, very slow grind higher. That's not really a trend. There's really no setups because the bears are still kind of playing. But it's so slow that volatility just collapses. When you move downside, it lights a fire. And as traders, that's what we need. We need a controlled burn. The upside comes eventually either way, assuming you're betting on America. Okay, we have a 36 second. We're 36 seconds out from the close of this 2-minute bar. Okay, decent size. We are clear of the break-even point of the day on the Nasdaq. The 5-minute looks all right. There's no stop hunting, but that's okay. That's just a cherry on top, and we can get it. Yesterday's open. Okay, we're fine. I will get ready. We are 12 seconds out. Let's see if we can get an entry here. Come on, bears, hold it lower. Oh, nothing. Wick upside out of those bulls. Again, you got to be picky at a range market. Got to see a cleaner close than that. That just wasn't very clean. We were low, and then in the last 10, 15 seconds, bulls wicked that up a bit. Nah, no, and that's not what I'm saying. I go short all the time. I'm saying if you're for your long-term stuff. We talk about that a lot around here. You trade to generate the revenue, you drive it into the long-term stuff, and you let that work, while in the midterm, you're still kind of hoping for downside movement because it increases volatility. Knowing that long-term, you'll get the upside. That's really what I mean. I'm indifferent, though. I like going long, I like going short. Short term, I don't care. Just give me a setup and I'll slap it. All right, same idea here does apply on this bar. I don't want to see it become too outsized. And we're still clear of everything I need to look out for. All right, let's get ready here. 5 seconds. Give it 15 seconds for a bit of a pullback. Not there. Hands off, disarm. Now, I know that some people are going to be curious. Well, you know, isn't the probability getting worse and worse the more you let it run? And that's not necessarily true. I know it looks that way, but what I'm doing is I'm waiting for a better close of a 2-minute bar because it offers me more information. And when we get those wicks, and even if it's lower, it can be a better setup for me because I want more information before I go short. But when we get those wicks back up, even if they're small, in what I know is a range market, those wicks tell a story at that very moment. Now you get continued downside here, that's beside the point. In that very moment, what's the wick telling me? Well, it's telling me that the bulls are still trying to buy this back up. They're still trying to buy the lows. I don't want the bulls to have any kind of confidence at all. Okay, now this move here just shot their confidence even a little bit more. But at that very moment when I needed to enter, it wasn't. The balance wasn't there. It wasn't right. Okay, now, had this been a trend market, if we were in like a market, not necessarily crash, but a downside trend market, that would have been a setup that I would have put on. So there's actually a very good example of how I might make different decisions based on what market we're in. Here you see the bulls are stepping in, wicking that big move back up. Goodness, they're turning it into a green bar. See what I mean? It's not like the bulls are lacking confidence. They have confidence. They're trying to buy that low. Can't have that if you're going short in a range market, right? Listen, if you guys haven't yet, please press like on the stream. Helps out tremendously. Let's see if we can, I don't know. Can we crack 200? I don't know if we've ever done that on a stream. Now remember, Trump is going to be here at a round table in the Middle East. I believe they're in the Middle East. He's meeting with the Middle East at least. He's going to be at a round table in 2.5 minutes. Okay, so we're going to keep an eye out for random headlines that are not scheduled. Gotta keep an eye out. Yeah, you see here, this little bull attempt at a reversal. So far, the bears are keeping those bodies small. We're 40 points below, 35 points below the break-even point on the day on the Nasdaq, so we have to consider that. That's a strong dig out of that hole out of the bulls. I mean, you look, we got down to 320 and we're back 50 points upside already. Okay, we've got 25 seconds left on this 2-minute bar. We're 27 points out from the break-even point. We are red. The Nasdaq is red on the day, 26 points out from being break-even on the day, that's, again, kind of an issue for the Nasdaq lately. Has trouble making decisions around that. I mean, look at the daily. What this market needs right now is some kind of fire. We need Trump to say something. I mean, honestly, at this point, good or bad, I don't care. Let's just get this Nasdaq away from the break-even point on the day. But I'll tell you what, it's about time for coffee. I'll be right back. Don't go anywhere, 2 minutes. right, we're back. We are back, and I'm watching the setup on the 5-minute chart. If we can get a nice, you guys see this? You see this? If we can get a nice growing 5-minute bar that closes here in about 4 minutes, above, with a close well above the 20 EMA on the 5, then I'd have to put that on going from the 5-minute chart, but it would still be put on the 2-minute just because that's the chart I'm trading off of. As far as the 2-minute's concerned right now, that little red doji in between is causing a few issues, but we're kind of right ahead of that 5-minute 20 EMA anyway. So I'm looking at the 5 more. So this here, though, this is a 2-minute chart. All right, this 5-minute chart here, I'm sorry, this 5-minute bar closes in 2 minutes. And again, for me to take this rollover long off the 5-minute chart, I would need to see it close probably at 21,420 minimum. So we would need to see a push here in the next minute 40 seconds on the 5-minute chart for there to be a setup. All right, now, if we can get a nice curl, we have 60 seconds left on this 2-minute bar. So now I'm looking at the 2-minute chart because the bears are starting to step in. Not giving me what I would need to go long to the upside. We really didn't even get close. So if the bears do step in here, give us a nice close on this bar, and then a clean rollover, a push downside, and a close at or very near the low of that next bar, which starts in 35 seconds from now, then guess what we have? We have a potential little stop hunting setup. But this bar needs to get lower here in the next 22 seconds, so let's go, bears. Somebody show some initiative here. All right, not the best close out of the bears. I'm no one says this action is unbearable. LOL. Yeah, you know, a long time ago, like almost 10 years ago, I remember I'd watch charts and you'd hear people talk about that kind of thing, like this, this price action. And I guess I didn't really understand what they meant, and I'm not sure if they knew what they meant. But you hear that a lot, like this action is really tough. And here's the reality: a lot of people. Okay, let's talk about the futures market for a second, because like small cap momentum, 100% has hot markets, average markets, and cold markets. It just does. 2020, 2021 was super hot for small cap momentum. 2022 kind of sucked because it was a big bear market. But in the futures market, let's talk about futures. I think a lot of times people complain about price action when it's not the price action, it's them lacking any kind of real edge. But I'll speak for me, and I think I speak for a lot of traders when I say that this week, and again, I've been pretty much treading water, which I'm happy with, but this week has been very wicky. It's been rangy, but like not in a way that provides a lot of channels. Like the market's going to be range bound 80 to 85% of the time, which is why, betting on giant trends doesn't make sense unless we're in a trend market. So if the market's going to be range bound that often, usually what you end up with is wide ranges with channel scalps and continuation inside of the range and continuation on breakout success out of the range. The success part is a necessity before I would enter. But lately this week, we haven't seen a lot of good channels. It's just been a lot of tight little movement. Like you see all those consecutive bear bars, right? It's very tight. There's no channel there. It's just a tight push downside with wicks back up. So it's not even continuation. It's not a channel. It's nothing. At least nothing for me. And then you get this back upside move, and it's really not developing much of a channel. I just need to see either a nice clean channel develop or a very clean continuation trade for me to put on. So that's my job here right now, is to find those, put them on, accept the outcome. But all that to say that if you're struggling right now, I understand. I get it, because especially if you're trading channels and or continuation, which most people are trading one or the other realistically, or both, it's been very equally balanced. And you can see that, by the way. This is why we look at market inertia. You can see that by looking at the last week or so on the New York session chart. Tuesday was maybe the most decisive day we saw. Monday, Wednesday, Thursday, and now so far here today, it's been kind of equally balanced. And when you have a very equally balanced market, you get not a ton of volatility. It tends to die off earlier in the day than normal. And you see a lot of wicks. That's part of the game. And part of playing this game, by the way, is recognizing this and being selective when this happens. Again, I think a lot of traders, you'll hear them say, and this is fine, I guess, if you're someone who trades really big and not often, like you only take 12 trades a year or something, but that's not really us around here. We're more day traders. A lot of people online will say, yeah, I just take the entire CPI week off. I just take all of FOMC off. And that's kind of curious to me, because it's like, the whole week one news event doesn't destroy the edge of the whole week. I just don't think they want to trade. I just don't think they like trading that much. Or they're burnt out of trading, which is a whole nother discussion. But for me, it's like, I'm going to come in every day, I'm going to sit. And if I need to be selective, I'll be selective. If the market's moving well, I'll still be selective, but I'll give it a little more wiggle room. Doesn't mean I'm breaking rules, but that's within my plan to have that little spectrum of quality. Scooby says, I've started rotating accounts instead of trading them all at once. Yeah, it's not a bad idea. somewhat of a decent way to scale down, but I'm up 450 on one account so far, thinking I'll just take the win for the day myself. Yeah, listen, if you're, I'm gonna sit until midday. But that's a whole nother discussion, when to call it early. I don't know. I kind of have a slot cut out, a couple of slots if I come back in the afternoon for trading. I prefer to just sit for the whole slot. Mitz, do you ever see a trend day in a range-bound market? Yes, you do. And that is when you start questioning, okay, are we transitioning into a trend market? I need more than one day, because someone could have looked at Tuesday and said, we're going to trend the next 4 days, and that obviously has not been the case. The more back-to-back trend days you get, you know, the higher probability that the next day is going to be a trend day. It's just how market inertia is going to work. The more and more back-to-back range days you get, the less you should probably be taking bets that the next day is going to be a huge outsized move day. Which is why, you know, when you see people on like Wall Street Bets, people still, is Wall Street Bets still like popular? Is it still, it's got to be still popular. There's so many members. You don't hear about it too much anymore though. But like Wall Street Bets 2021, it was kind of funny. I mean, not funny because people were getting hurt, but like, I mean, they're adults making their own decisions. So I mean, I guess, you would see a market like this, and then you'd have someone come in and be like, all right, I just loaded my life savings on 12% out of the money calls expiring in 2 days. And it's like, hold on. What? Why would they take that bet? I just think it's a lack of understanding the market inertia, which is kind of, I don't know. It's frustrating, but the way I look at it, we're all adults. If you want to make that decision, feel free. It's a market. Clinton made 40K in like 2 days in the Wall Street Bet days. Now, Clinton, hang on now. You have to follow this up and finish the story. Did you take the 40K and ride off into the sunset? Or did you take another bet same day, the next day, and lose 60K? You gotta finish the story. Yeah, ATR currently is sitting at about 20. I have ATR on MNQ, 2-minute chart, with a value of 10. So it's looking at the last 10 2-minute bars. Clinton. You son of a bitch. Let it run down, made about 8K in the end. Well, hey, that's better than most people made out in the Wall Street Bet days. Off of 2,000, you rode off into the sunset. A lot of back and forth here right now. We're seeing maybe the early stages of channel development, but volatility I would need to see increase. Again, I'm keeping an eye on it through all this. If we start getting any kind of anything resembling a setup in the next few minutes, obviously I'll talk you guys through it. Adam, bet on Wall Street Bets? Let's just say I was able to save on taxes. Yeah. Well, it's a learning experience. You know, the beauty... I mean, there was some... Obviously some dark stories coming out of Wall Street Bets, but I think it's good. And a good outlet to maybe, like, make light of it, even if it's a life-altering event. But the good thing about trading is that all of us have probably had relatively substantial losses at some time early on in the trading career. It happens to basically everybody. Now, what's substantial is going to vary depending on the person, but substantial is substantial no matter what it is. It's a feel thing, right? The good thing about this is that I very strongly, and this is where the whole go bigger thing comes from. This is it. I am very much of the camp, and I truly 100% believe that no matter how big or how bad it gets, you can always outgrow mistakes and learning experiences and losses. Always. Always. Hedge fund managers, down billions, come back stronger. 5-10 years later, they're back and wealthier than ever. It wasn't straight up for all those people. You read into a lot of their stories, there were some dark times losing everything 50, 60 plus years of age. Because they're taking bets, and that's why they're so wealthy. No, I get it. A lot of people don't like, hedge fund managers, blah, blah, blah. But like, if you look at the life story, I mean, there's something to be learned there. I don't care how big the losses are, how deep it gets, how dark it gets, how bad it gets. You can always outgrow a bad situation. Always. Always. Yeah, no one exactly. It's everything's going to be a learning experience. It just varies how much you paid for the lesson. But the lesson is always worth more than what you paid. Again, I don't care how big it is. All right, right now the market's kind of getting stuck right here around that 5-minute 20 EMA. It's a psychological level. It's heavily watched. You know, it's going to be respected. It's not enough to take trades off of. Again, I've told this story before, but I went through a period years ago. I tried to make EMAs work for trading, and I tracked all the data, and I really, really tried on blue chips, on ETFs, indices. I could not get any edge out of EMAs, no matter which one. So I don't take trades off of the EMAs, but they will be relevant just because they're heavily watched if you're looking at the right ones. Like the 20 EMA on the 2-minute, I have it up for context, but it's less relevant, let's be honest, because it's less watched than the 20 EMA on the 5-minute chart, which is a very, very popular one. Lee, I bought 50K of Dogecoin in 2022 at 5 cents. and completely forgot about it until Trump was elected. Sold it at 46 cents last November. Put it into the futures account besides the taxes. There you go. There you go. Now, what I would add to that is, ideally, maybe don't go back to the crypto world. You know, crypto is an interesting thing. Trading crypto is just about the worst thing to trade, in my opinion. The spreads are huge. The fees are ridiculous. It's not really regulated that well. Futures is just way better in every way. And the big one is the spreads, by the way, and the fees. The spreads on, like, Bitcoin they're ridiculous. But a lot of people ask about trading Bitcoin. And if we forget about the spreads and the fees, let's assume that you have some way, which doesn't really exist, but let's assume you have some way to get perfect spreads and free, no fees at all. It's like, well, Bitcoin, in a lot of ways, is starting to trade more and more like an indice. Like the Nasdaq, like the S&P. If you overlay the charts, they're starting to look closer than they used to. So it's like, since the no fee perfect spread scenario doesn't exist in Bitcoin, it's like you might as well just be trading futures. There's no benefit anymore to trading Bitcoin. All right, so we've got a flat top going here with honestly a bit of a flat bottom. So you guys know when we get these flat little channels, I have to sit and wait for this to break because for me, maybe you have a ton of edge here. I don't have any edge. I think it's very hard for anyone to find edge in flat channels with flat tops, flat bottoms, because it's just 50-50. It just is. So we got to wait to see this breakout. One way or the other, I don't care which way it goes, but we are still, by the way, struggling around that 20 EMA on the 5-minute chart, testing that over and over and over and failing. We're at the break-even point. We're 3 points away from break-even, so we're basically there. Market's just kind of stuck here. Again, if you think about, like, well, what makes sense? How does the market typically move? For the market to remain stuck here until the close is very improbable. So a breakout is coming. We just don't know because it's a flat top, flat bottom. Which direction? Again, it's 50-50. It's not a skill issue. It's just, those are just the probabilities. It's 50-50, which is why you see volume and volatility die off in sideways ranges like this, because a lot of times the people driving the volume, they understand that. So you just got to wait. let someone win and then start putting trades back on. That's when you see volatility come back, by the way, when you get a nice sustained break one way or the other. All right, here we are getting kind of a test of the, at least coming in for a test of the flat bottom there. Well, we're in the early stages of what could be, I told you guys I'd let you know, of what could be continuation if we see a break downside. If we end up holding the flat bottom there, then that, again, that shoots that setup in the foot. But a break is coming. It's just a matter of which way do we break, and then let's get volatility back and then see if we can get a setup from there. All right, here's the test. That flat bottom. Okay, yeah, Pumple. So let's look at what you're talking about there. Pumple says there might be a descending resistance forming starting at the 930 bar. And I gotta tell you, I don't disagree. Here, look here. Oh, goodness. There we go. Oh, are you talking this or this? I'd probably more be looking here. I'd probably be looking at this, but honestly, I would prefer this break downside. Again, right now, this is essentially 50-50 as far as this is going to break up or down. I want to see this break downside because we're already below the break-even point on the day. I don't want to deal with it again. Let's see if we can get a break downside, maybe a nice clean continuation sequence, a 3-bar sequence closing like here. And then boom, we could stop hunt those lower days. That would be a beauty. Nico, are the videos you have on your channel for options trading still relevant? Yeah, they are. If I remember correctly, the options videos, I focus mainly on the Greeks and understanding how to flip that so it's in your favor, which, by the way, that entire understanding the Greeks is what is the first thing that got me to being able to pay my now wife and my bills and like essentially go full-time. Well, go full-time. That was the first thing, was trading net short option strategies. And that just came from a basic understanding, well, an intermediate to advanced understanding eventually, of how options operate, why do they exist, how are they priced, why is there a buyer and a seller at any given time. For there to be a market, there has to be two sides. Okay, if something is too good to be true, nobody would sell it to you or buy it from you. So there has to be something in it for both the buyer of the option, who's getting massive leverage, right? What's in it for the seller? Massive probability. And that becomes more and more the shorter dated and the further out in a strike you go. But if you're taking the sell side, the shorter dated you go and the further out you go, you're also taking on bigger black swan risk. So I always found net short, whether it's running the wheel or running spreads, option strategies, to perform best between 7 and 45 days out to expiration when you first put them on. That's when the theta curve, 45 days out, that's when the theta curve really starts to pick up, which is good if you're net short. We're still kind of hanging out on this channel. ATR is now below 18. You're gonna have to see this break at some point here, this channel. All this sideways, flat top, flat bottom. Yeah, this 50-50. We're gonna pick a direction, and that's when our opportunities will start to open up. Look at this, we'll break even on the day again here. Goodness. Nasdaq at minus 0.02%. This right here, by the way, from here, this. That right there. You start getting phone calls, texts, comments when the market on a bigger time frame scale is doing this. Okay, and everyone starts saying, "You all right? Like mentally, you okay? Like how's work?" And it's like, what? Like, this is what we want. This is good. This is a good thing. We can generate more revenue more consistently and drive it back into the market at cheaper prices. This is where you maybe should start to give that trader in your life a phone call, because this here is where we're all just kind of sitting. What do we do? But here we are getting attempted a breakout while I'm saying this, which is good. Maybe we spoke it into existence, huh? All right, so we got 45 seconds till the close of this 2-minute bar. Honestly, I would prefer to watch one more, because you look at those previous bars in the sequence and they were small compared to this one. And this is the first breakout bar attempt. So I think I want to see a second bar here if we can get a decent close out of this one to begin with. And then that would also open things up a little on the 5-minute. Soapy, yes, yeah, I have videos on options. I have videos on level 2. I have videos on reading the tape. But I'm working on more. There's more coming. All right, we're back above the break-even point on the day, so the Nasdaq is now green on the day. This bar is very important to me. If we can get a nice push higher and a close on the 2-minute, which is what you're looking at right now, if we can get a nice equal-sized bull bar compared to the previous bar, or slightly growing, but in this market, probably equal-sized, closing very close to the high, then I would buy the rollover here in 40 seconds from now. Which, by the way, would also open us up to try to stop hunt that high of day. Which is currently sitting at 470. Okay. All right, let's see if we get this here. Here's all the looks, 5-minute, 2-minute. I need to see this 2-minute bar close very near the high. It's wicking back, it's holding the wick back, and it's a shrinking bull bar compared to the previous. I can't take that, I gotta hold off. That would be that'd be a rule break. So I cannot put that on. By the way, guys, while we sit here and wait for good setups, this goes through the weekend and ends early next week, okay? And no one knows what it's going to go back to, but 80% and single day pass is one of the best deals they run. It's actually the second best deal that they run. They sometimes, just so you know, they sometimes go to 90, but that happens very rarely. It doesn't happen very often at all. So 80% single day pass, I am more than happy to buy accounts when that's going on myself. Code BIG, B-I-G. By the way, when it is 90% off, that code will give you the best deal, always. All right, 30 seconds left here on this 2-minute bar. I'm still, the same idea applies, but the bears are trying to turn this into a red bar, or keep it a red bar, I should say. All right, I'm giving you guys a job. If something happens, I need you to yell and scream and shout in the chat. I will be back in a couple of minutes. Don't go anywhere. All right, well, no one yelled or anything, so nothing really happened, and that seems to be the case. I gotta tell you, though, I'm very happy we broke out of that little sideways range. That's a good sign, right? So we are now opened up to the ability to either develop a little channel here, which would be nice, or get a nice little continuation. And still, stop hunting those highs around 470 that we saw off the open. That's still on the table here. I have day so far is 21,470. Yeah. Channel width. We're looking at what, maybe 30 points? 30-ish points of channel width. We have really 2 touch points up top. But again, you guys know I'd much prefer to buy an ascending support than to sell an ascending resistance, just because the timing, you know, you have the trend in your favor versus against. So this right here would be the second touch point test. Let's see if we can get at least 2 going. I would need to see a strong push, beating that previous wick high, and then a retest would be on the table for me. Yeah, we're making a test of this. I'm just going to draw it right away. That's not set in stone yet. We're still just making the second test. You guys know I'm a big fan of at least 2 clean touch points. Usually 3 is better. But here we are making the test. Let's see if this becomes a thing. Tron, have you thought about running 2 charts for more signals? I'm running the 2 and the 5. I'll take trades off both, but obviously the 2 minutes is going to provide higher quantity of setups. 5-minute setups are going to be lower in quantity, but slightly higher in quality. So I like that balance. Again, we're still kind of hovering around that break-even point. We're 20 points in the green. The Nasdaq is on the day so far, which is a little bit pathetic. I'd love to see this thing just make a push one direction or the other. Corey, on the daily, appreciate you. Good to see you. Zach, was 1042 a news bar? Did they revise the Michigan number? No, I don't see any revision. I'm still seeing 50.8 compared to the 53.4 forecast. Usually if they are, maybe, but usually if they are going to revise the Michigan number, it just hits, that's what the final read is for, to make any revisions that are necessary. All right, well, it's kind of, I gotta tell you, it's kind of sloppy around what would be that trend line. We're barely holding it here, but not clean. We'd have to make an adjustment to that trend line if we end up seeing a bounce here and a clear of that previous wick high. Obviously, that bigger green bar that Zach was talking about, that would be the bar I'd need to see this clear if we end up holding this trend line at all, which the bulls are struggling to do here. Chris, what do you think about the trend line coming from the low of the session? Okay, so Chris is looking. Well, I'll probably end up drawing it like this. Realistically. Just because I'm not a fan of super aggressive. Plus, that's already been broken. Listen, if this became a thing, Chris, and all you guys, if we ended up seeing a clean bounce and push, then all of a sudden it's on the table. Let's go ahead and get rid of this. I like to keep my charts clean because that's not going to become a thing, and we just saw the second test fail. So this here would be kind of the third test, which I would need to see it hold if we ended up trading that channel at all. But if we did, if we saw a bounce here and a push to clear this high and then a retest, that would be probably the second cleanest setup we could get of the day. First being that first continuation trade, which was really a beauty. Well, there you go. We're attempting that little push. Let's see if we can clear that previous wick high on that big bull bar. I would want to see that clear. Otherwise, I'd have to classify that as a mushy bounce, which increases the probability of rollover through the trend line rather than a continuation bounce. Let's see if we can get that done here. This is one of those days, though, man, just to be patient. Yeah, I mean, this is something to discuss here. If we look, I mean, we drew that trend line before the test was made. Okay, now, this is not to say, wow, look how good I am at drawing trend lines. That's very basic, okay? My point for even bringing this up is to show you that this is all just a self-fulfilling prophecy. We saw a big bear candle, we saw a test, and then the bulls bounce it up hard. Why did the bulls bounce it up hard? Where did that confidence even come from? Well, first of all, if you look at the 5-minute chart, you have the 5-minute 20 EMA, but we pushed through there a little bit and met this. It's both of those things coming into play, the 5-minute 20 and the obvious trend line, but you know that a million bulls just looked at that trend line and thought, yeah, maybe, that's probably there. Just like you guys in the chat saw it. So I need to see 3 touch points when we're coming in with an aggressive test like that to really present my edge on a setup like this, and then I need to see a nice continuation bounce to clear that previous wick high. But it's all just a self-fulfilling prophecy. Okay, which is good because it means you can find edge. That bounce is a little mushy. Come on, Bulls. We got to get up and clear about 445. Then we can come in for a retest. Nico, how do you manage your take profits, stop loss targets with the ATR? So right now, I'm not managing them like based on the ATR so specifically all the time. Now, I know that it makes sense to do so with if you're using scripts to do it. But what I've been running lately is 40-40. And then if ATR starts dipping hard below 25, it makes sense to me to start leaning, and my data also shows it makes sense to start leaning a little heavier into negative reward to risk, higher win rate on average setups. So maybe I leave the 40 point stop and take profit ratio, and then I manage early often somewhere between 15 and 25 points in the green, usually around 1 to 2 reward to risk. That's how I deal with collapsing volatility right now. Now, if volatility, meaning the ATR, the average range of a 2-minute bar, goes beneath 12 and especially beneath 10. Beneath 10 for me is like, it's time to walk away at that point. We don't see that very often, but yesterday, I forget which day it was now. I took a couple of trades while ATR was 13, which is kind of like almost bare minimum. Okay, now they were both winners, but I had to lean into negative reward to risk, which is naturally going to have a bit of a higher win rate, which is why you can still have edge. All right, now my two trade ideas, I almost always have more than one idea. It's just a matter of which one hits first. Let's look at this, okay? This shows it really well. For that channel scalp to become a thing, for me to buy this ascending support, I would first need to see a bull push to clear this wick high, because this here is a mushy bounce, and that increases probability in my experience of breaking this downside. But that wouldn't be a bad thing, because that's my second trade idea. Again, I'm indifferent to what happens as long as it gives me a quality setup. So I'm not like sitting here like, please, make a push higher, because I have an equally, arguably maybe better probability setup if we can actually break lower and then get a 3-bar bear continuation sequence setting up. And I would love to hunt some of these stops, because this flat bottom is obvious and would be brutal, likely, because I know that there's probably a bunch of stops. There's also a bunch of stops here at the low of day, but there's probably a bunch of stops right here. That's liquidity for a short, if we can get that. Plus, that would also, if we can get that sequence, that would steer us clear of the break-even point on the day, which we are 12 points away from. The Nasdaq is currently green 0.05%. Yes, you heard that right. Pathetic. All right, testing a downside break of not only that trend line that we just talked about, that mushy bounce increases the probability of break of the trend line, but we are also attempting a break downside of what's lining up with it, which is the 20 EMA on the 5-minute, which today has been a problem for this market. Been getting stuck there pretty often. Pozo, this here, you are looking at Thinkorswim, but the trades are being executed on NinjaTrader through both Rhythmic and, well, through Rhythmic Apex accounts and through Take Profit Pro accounts. But this here, what you're looking at now, this is NinjaTrader, and this is Thinkorswim. All right, guys. Well, hey, let's hope that this volatility picks up a little bit. You guys know what I'm looking for now. Both of my ideas here. I'm hoping we get one or the other. Again, I'm indifferent to which one we get, but let's hope we get another setup or two here throughout the day. All right, guys. I will be live Monday, 8:15 a.m. Central. If you have not done so yet, please subscribe to the channel, and I hope to see you become a regular in the chat. Again, hey, this deal at Apex, 80% off single day pass, the second best deal that they're ever going to run. This ends very early next week, so use code BIG. By the way, no matter when you use that, it will give you the best deal, always. But if you're more like, hey, listen, I want the better asset, I want daily payouts, I'm pretty confident I'm going to pass the test, you know, which one's cheaper. Take Profit Trader would be way more expensive without the 30% off and no activation fee, but the same code BIG, BIG, baby. Best deal always, and we'll give you 30% off, no activation fee at Take Profit Trader, which I love Take Profit Trader. It's really a great company. All right, guys, I will see you early next week. Again, I hope this picks up a little bit for us here today. If not, if you end up taking the week early, I hope you guys have a good weekend. And hey, my weekly weekend reminder. I know a lot of you guys struggle with like anxiety or like, I need to get back to the screen, I need to make money. There's nothing you can do. The market's closed over the weekend, okay? So do your damn job, which is what over the weekend? Not to sit there and fiddle your thumbs and pretend that you're pressing hotkeys. Your job over the weekend is to rest up because we have work to do come Monday. And I better see you here bright and early Monday morning, ready to work. All right, guys, have a good weekend, rest up, and I'll see you in a few days.